3 days ago, the National Association of Homebuilders dropped a number that sent shockwaves through the industry.
Well, home builders across North Texas are starting to cut prices after they peaked in May. This is according to our partners at the Dallas Business Journal. One of those main reasons is increasing inventory. Home builders across the country are seeing sales slow down as mortgage rates rise.
U.S. existing home sales last year dropped to their lowest level since 1995 as elevated mortgage rates and house prices kept many prospective buyers on the sidelines.
Builder confidence crashed to 34 in April, a 7-month low, with sales expectations plunging 7 points and buyer traffic dropping to just 22. That's 24 straight months below the 50-point break-even line. 2 full years of more builders saying the market is bad than good. And that's not even the scary part. The scary part is this. Builders aren't just pessimistic anymore. They're in controlled retreat. Nearly 60% of surveyed builders reported starting fewer homes than they're selling. An intentional effort to bleed off inventory. For many operators, net earnings are negative. Cash preservation has become a daily discipline. That's not caution. That's panic with a business plan. Today, we're breaking down 19 markets where the combination of builder oversupply and crashing home prices has created a correction of 10 to 35% from peak, and why the data says it's spreading, not stabilizing. We'll show you exactly where builders are cutting prices, dumping inventory, and pulling back on permits. And at the end, what this means for your home's value, even if you didn't buy new construction. If you own, buy, or invest in real estate, subscribe and hit the bell right now. This is the kind of data that changes decisions, and we publish it every single week. Let's get into it. First, what's driving the panic? Because this isn't just rates. It's 4 forces hitting builders simultaneously. Force number 1, the Iran war spike. Mortgage rates had dropped to 5.98% in late February. Then the U.S.-Israel conflict with Iran pushed oil prices up 35%, spiking rates back to 6.46% by early April. That whiplash killed the spring selling season before it started. Buyers who were on the fence fell off. 62% of builders now report that suppliers have raised material costs due to higher fuel prices. And 70% said they can't price homes accurately because of material cost uncertainty. Force number 2, the unsold inventory wall. The number of unsold completed new single-family homes hit 119,000 in early 2025, the highest level since July 2009. And it's kept climbing. Builders are now sitting on a 9.7-month supply of unsold new homes nationally. A balanced market is 4 to 6 months. These homes are depreciating every day they sit, and the builders know it. Force number 3, the incentive arms race. 60% of builders offered sales incentives in April. 36% cut prices outright, averaging a 5% reduction. This is the 13th consecutive month the incentive share has exceeded 60%. Rate buydowns, closing cost credits, free upgrades, price reductions. Builders are throwing everything at buyers, and buyers still aren't biting fast enough. One industry report described it as builders buying sales at the cost of their margins. Force number 4, the resale competition. Here's what makes this different from previous slowdowns. The median new home price has actually fallen below the median resale price in many markets, something that's only happened 2 or 3 times in the last several decades. Builders are undercutting existing homeowners to move inventory. And that's creating a death spiral for resale sellers who can't offer rate buydowns or brand new kitchens. Now let's map where this is hitting hardest, because the damage from peak is staggering in certain metros. Starting with the markets that have seen the deepest corrections from their pandemic peaks, where builders are most distressed. Austin, Texas, down 25.2% from the May 2022 peak. Punta Gorda, Florida, down 25.3%. Cape Coral, Fort Myers, down 18.8%. Northport, Sarasota, down 17.4%. Tampa, down roughly 10 to 15% from peak, with condos down even further. Dallas, down 4.1% year over year, the steepest among major Texas metros. Denver, down roughly 5% from peak, with closed sales down 5% year to date. Phoenix, San Antonio, Jacksonville, Orlando, Memphis, Tucson, Palm Bay, Lakeland, Colorado Springs, Stockton, Sacramento, and San Francisco round out the list. AEI confirms 28 of 53 major metros are now declining, including every single metro in Florida, California, and Texas. That's not 19 isolated stories. That's a pattern. And the pattern keeps expanding. Folks, if you know someone who just bought or is about to buy in any of these markets, share this video with them. And if you're not already part of this community, subscribe now. We track every one of these metros in real time. At the end of March 2026, 11 states had active inventory above pre-pandemic 2019 levels. Arizona, Colorado, Florida, Idaho, Nebraska, Oklahoma, Oregon, Tennessee, Texas, Utah, and Washington. A year ago, it was fewer. The list keeps growing. And that's the spread. Here's how the mechanics work. A builder in Austin or Tampa or Phoenix has 30 completed homes sitting unsold. Every month those homes sit, they cost money. Loan interest, maintenance, HOA if applicable, property taxes. The builder's lender starts getting nervous. So the builder slashes prices by 5%, then 8%, then offers a rate buy down that effectively drops the buyer's monthly payment by $400. That builder sale at a discounted price becomes the new comp for the neighborhood. Now, every resale seller within a mile has to either match that price or sit on the market for months. They can't offer rate buy downs. They can't offer free upgrades. They can only drop their price or wait and watch their equity erode. And the data confirms this dynamic is accelerating. Nationally, inventory is up 8.1% year over year as of March 2026. Existing home sales fell to a 9-month low in March. New home sales collapsed 17.6% in January to just 587,000 annualized units, the weakest reading in over a year. And AEI is projecting national home prices to go negative by April and decline 1% by year end, followed by 2% drops in both 2027 and 2028. The builders see this. That's why they're in controlled retreat. Larger builders with footprints in Texas and Florida are notably less optimistic than smaller operators because their geographic exposure puts them directly in the path of the correction. BOFA has downgraded Meritage Homes and Taylor Morrison to neutral, calling out net pricing pressure and elevated inventory across Sunbelt markets. Builders are shifting away from build-to-order models, negotiating quarterly lot deliveries instead of bulk land purchases, and prioritizing cash preservation over growth. This is what an industry preparing for a prolonged downturn looks like. Not a crash, not a collapse, a methodical, data-driven retreat by companies that see the math clearly and are adjusting before the math adjusts them. So what does this mean for you? If you're a homeowner near new construction, your competition just got more aggressive. Builders with unsold inventory will undercut your resale price to move homes. Monitor what builders in your area are pricing at and what incentives they're offering, because that sets the floor for your neighborhood's values. If you're a buyer, this is the most leverage you've had in years. 9.7 months of unsold new home supply nationally. Builders are desperate. Walk in with data, negotiate hard, and ask for rate buy downs, closing cost credits, and price reductions. They're saying yes to everything right now because every unsold home is a daily carrying cost they need off their books. If you're a seller in any of the 19 markets we named, price to today's reality, not 2022's memory. Homes priced correctly are still selling. Homes priced to ego are sitting 100 days and getting lowballed. Every month you wait in a declining market is another month of lost equity. Here's the bottom line. Builder confidence at 34, 24 straight months below break even. Unsold inventory at a 15-year high. 11 states above pre-pandemic supply levels and counting. 28 of 53 major metros declining, and a rate spike from the Iran conflict killing the spring season. The builders aren't guessing about what's coming, they're preparing for it. The question is, are you? Subscribe, hit the bell, and drop a comment telling us what you're seeing in your market. Are builders cutting prices? Are new homes sitting empty? Those ground level reports help everyone in this community see what's really happening. See you in the next one.